Hey all, welcome to ShareTreck. This is Raj here. Sorry, I'm a few minutes late today, but let's get started. So I'm going to start off by talking about um, some of the things that are top of my mind today, and it's basically going to be about the surprise moves that have happened that have brought down the market. It's more or less like a political thriller and not in a good way. We've been watching a rapid fire sequence of policy bombs out of the White House, and the timing is raising eyebrows. Some believe this isn't just about trade. It may be part of a larger effort to dominate headlines and drown out a story that just won't go away. And that's the theory, the Epstein files, right? Let's unpack what is happening out here. As you will see, that if I had a previous video, I think a few days ago, where we were talking about uh, why all these illogical changes are happening. In just 1 week, the administration has rolled out a series of aggressive and frankly erratic and reckless trade moves. Each day brought something more severe, as if the goal wasn't policy at all, but rather headline saturation. This comes as renewed pressure mounts over the unsealed Epstein documents, and speculation swirls around who is implicated. If you're wondering whether there's a pattern here, you're not alone. Let's go through the week's major tariff events, right? I'm going to show you an image out here. You will see that the first was July 8th, 50% tariff on copper imports, which was justified under national security, and market did not take it well. Canada, a key copper partner, was furious and promised retaliation. Then July 9, a threat to impose a jaw-dropping 200% tariff on pharmaceuticals with a 1-year grace period to shift back production to the US. This alone would blow up drug supply chains and send prices sky high for Americans. And fast forward to July 11, a sweeping 35% tariff on all Canadian imports announced while negotiations with Canada were still ongoing. And this blindsided Ottawa and seriously strained relations with Canada. And now, a blanket 15 to 20% tariffs are being planned for other major trading partners, with letters going out to multiple countries. That's not just one trade war, that's global economic combat. Here's a quick table, as you can see on the screen. This is looking absolutely bonkers. The question then is whether this is a distraction or just aggressive policy. So what's really going on, right? So there is growing speculation that these announcements are meant to bury the Epstein files under a flood of even more chaotic news. It's a classic media distraction tactics, keeps the headline moving fast enough and the public can't focus on any one issue for too long. And let's be honest, retail investors, small businesses, and even our allies are left completely disoriented. And the market is responding the only way it can, with uncertainty. Stock futures are down this morning finally, and volatility is climbing. Traders are asking whether this is just noise or the beginning of something deeper. There's even talk of the taco trade making a return. There are corrections only where the market shrugs and powers higher. But with this much policy risk, the shrug feels a lot less confident today. And to top this all, for added measure, there is an attack on Fed Chair Powell. And as if tariffs weren't enough, the White House is now publicly attacking Jerome Powell. The Fed chair is being accused of mismanaging renovations at the central bank's DC headquarters, which hints that legal violations may be involved. And this is one of the ways to say, the only reason a president can remove a Fed chief is for underperformance or mismanagement. So they're building a case, it seems, for removing Powell before the time. Most see this as an attempt to pressure Powell to lower interest rate or perhaps even step down. It adds yet another layer of instability to an already chaotic policy environment. So as a let me see what's happening out here. Are we streaming? Is the stream going on properly? Yeah, it is. Okay. So as a retail investor, all of this is frankly exhausting. We are looking at the market being whipped around by unpredictable trade wars, political feuds, and institutional sabotage. And through it all, the Epstein file quietly fades from the view. I hope it does fade from the view, because for all of us as retail investors, if that is the reason why all this is happening, it better be gone and let us have some stability. I don't know whether we are watching a burial of that news or we are watching a calculated strategy unfold. Whatever the answer, the outlook for the day is clear. Expect more volatility, more headlines, and less clarity. I would like to have your thoughts in the comment section. Please let me know what you think. If this is what is happening, then we are in store for even more bad headlines if those files won't go out of the news cycle. So that said, let us look at today's support and resistance levels. Now, I'm going to take us across to the TradingView platform, and we'll check out what's happening out there. So let's go on to the TradingView platform and have a look at what's happening out here. Okay, so I'm going to go on to the futures as always. That's the first port of call for us. And in the futures, I want to see that we have a negative minus 0.56% move in the price for the S&P 500 futures. We are at 6,288.50. And yesterday we stopped exactly at the resistance that we mentioned. And that was the end of yesterday. And today we are back down again. And we have support at around 6,283. We are right now at 6,288.75. Failing which, the next support is going to be at 6,270, which is a red line that you see out here, which happens to be the 9-day exponential moving average. Then we look at NASDAQ. NASDAQ is also down 0.50%. Yesterday we were within the range that we mentioned. And today we are down almost 0.50%. We are at 2,289. 22,897, and we are getting support from the 9-day exponential, which is this red line that you see out here, which is at 22,856. Failing which, we have the 21-day exponential at 22,509.38 giving us support. I am daring to say that the next level of support is going to be the 21-day, because we have the bearish divergence which has been pushing us for quite a while. And I think even by Trump's standards, this 50% copper, 200% pharmaceutical, 35% on Canada, and 10 to 25% on the rest of the world. All of these things are, I think, overkill, and something has got to give somewhere. And we may see the action on the long-term bonds, and we may also see it on the stock market today. And that's what we are seeing in the futures. Now, if you look at the dollar index, miraculously, it's up a little bit, and it's struggling against the resistance of 97.80. Right now, it's at 97.81 or 80, somewhere in that region. It's fluctuating out there. It's a very strong resistance, and I suspect we may not be able to cross that today, but we'll see as the market unfolds. And you have the 10-year yields going up by around 0.85%. We are seeing a bull flag being formed out here. Bull flags generally break out on the upside. And we have the MACD, which is bullish, and also the momentum is picking up out here. And if you look at the 20-year, we can see the 20-year is up 0.86%, and it's on 4.90. Again, a bull flag being formed out here, ready to break out on the upside. And on the 30-year, you have a gain of 0.90%. Again, you are looking at a bull flag out here. So overall, there is a possibility that we could have a reverse head and shoulder forming out here, or this bull flag could break out on the upside. And that would be the general trend you see on all the three long-term bonds that we have out here, a potential for a head and shoulder, and also a potential for a bull flag. So things are looking a bit mixed out here. We don't know which way it's going to go. So as a matter of caution, I'm not acting in the market today. I haven't done anything yesterday either. And we're going into the indicators and look at S&P 500. And today for S&P 500, the 9-day exponential, which is sitting at 6,220, is going to be the support. And if you look at QQQ, you would see that pre-market we are already down 0.39%, and we are at 553.26. So the 9-day exponential is going to be the first support for the QQQ. It's at 551, and that's the 9-day exponential, which is going to be the support today at 551.13. And pre-market, we are at 553.21. So that's the range out there. And I would dare say that we could potentially also check 542.28, which could be the next support, because if we fall below the 9-day exponential, which is a prospect that's likely to happen because we have a bearish divergence with us for quite a while, which has not been resolved. Now, I'll go back to the VIX and say that for a change, the VIX has started moving up the last 3 days. I was wondering why the VIX is not responding, despite the fact that there is so much of chaos going around. But finally, the thing is happening today. I don't know if it's if on market open, it's going to give into the taco trade mentality and disregard everything and go ahead further. I think there could be one more catalyst today. Nothing good comes when somebody visits the White House. NVDA is supposed to be visiting the White House, Jensen Huang. And I don't know why that visit is happening, but I wouldn't rule out the possibilities of more restrictions on chips. So I'm watching out on that angle. I would like you guys to let me know in the comment section whether you agree with me or you disagree on that. Then gold is now starting to move upwards for the first time in a short while. The fundamentals are behaving the way they should, given all the mess and uncertainty happening all around us. So gold is moving up again, and I think the resistance for today is going to be this minor line of resistance at 3,427.82. I don't think we are going to go up all the way, but the trajectory is in the right direction. The 9-day and the 21-day exponential are giving support. And let us go and have a look at our AI stocks. NVDA is down 0.49% in pre-market trades. And Jensen Huang is saying that export restrictions have caused a 2.5 billion sales loss in Q1, and it's expected to lead to a 8 billion loss in Q2. Because if you remember, in Q1, the H100s, they repurposed and found alternative markets, and that probably saved them a little bit of the loss. But this time around, I don't think they have much leeway out there. So 8 billion is going to be lost in Q2. So you can see that these policies are taking the sheen of really good companies with solid IP and which seem to be a winner. So overall, we are creating a lot of losers, in my opinion. You will see that there was the bearish divergence, which was signaling us right from the beginning that there are problems underlying. So this could get triggered today, and probably we are going for a little bit of a reset out there. Meta is down 0.50%, and we have a bullish pennant that is still in action, and our 9-day exponential at 721.89 is going to be the support for today. And I think the bullish pennants usually break out on the upside. So there's a possibility for Meta to break out on the upside. I don't know if it's going to happen today or tomorrow, but right now that's what it looks like. But if this continues keeping on going down along, staying under this diagonal line of resistance, then it could indicate the potential of a bear channel. Now let's look at Google, which is down 0.50%, and they are going to report their earnings on 22nd July. And overall, I think Google is a pretty good company. Today it's down 0.50% in pre-market trades, but overall their numbers are looking pretty good. And after what we saw with Grok, I think ChatGPT and Gemini, all of those seem to be much more stable releases. And I think all of those should definitely work. The sentiment for Google is still continuing to be bullish. MACD is still bullish, and momentum is above average, and plenty of room on the RSI to go up. I think that if it wasn't for the chaos that is being created with all these tariff wars, I think Google should also be moving upwards, but the overall market is going down and Google is moving simpatico. Now let's look at Amazon. Amazon is down Amazon is up 0.60% after being down 0.13% yesterday. And in the process, we are looking at this diagonal line of support at 221.71, performing the role of support today. It's a dynamic line of support, and today it's at 221.71. And the resistance, which was at 224.37, a minor line of resistance, is going to continue to be a resistance for today. Let us see if this bull flag breaks out on the upside. If it does, then I think there is more in store for Amazon. And by the looks of what's happening in the morning, it seems good. But we had some reports. Yesterday, I saw in Bloomberg third-party reports that day one of the Prime Day sale was 41% below. But now the new rationale is that because there is a four-day event for Prime Day. Prime Day is no longer a day; it's 4 days. So the belief is that the sales will be distributed along the 4 days and still will be above what happened last year. So that's why I think there is a bit of positive out here. And financial firms have also raised their targets for Amazon. JP Morgan has moved Amazon target to $255, and Piper Sandler has moved it to $250, and Morgan Stanley has kept it at 300. So overall, there is a lot of upside according to major analysts for Amazon. So that's definitely working in favor of Amazon. Apple is down 0.59%, and the CD delays have led Morgan Stanley to cut their price target from 275 to 252 for Apple, and that probably is continuing to hang over Apple. It's down 0.58% in pre-market trades, and we have support out here at around 210.34, which is one of the exponential moving averages, the 100-day exponential moving average, which is going to give support today. Resistance is very strong at 213.75 in conjunction with the 200-day exponential moving average. So that's the range for Apple today. Microsoft is down 0.33% today after falling down 0.40% yesterday. And finally, the diagonal line of support has become a diagonal line of resistance for Microsoft. Support today is going to be at 496.90, which is the 9-day exponential. Then let's look at Tesla for a change. Tesla is down 0.15% in pre-market trades, and the 9-day exponential sitting at 308.14 is the first line of support for Tesla. And right now we are at 309.44 in pre-market trades, down 0.14%. Next, let's look at Oracle. Oracle is down 0.77% after dropping 0.34% yesterday. I would still say that we have support at 230.33. The company is non-controversial. It has got a lot of good things going for it, and also the Stargate expansion. All of those things have taken it to an elevated level, in my opinion. So we should expect some consolidation out here. And then we have AMD, which is down 0.57% in pre-market trades. It's at 143.36, and the support today is going to be at 141.09. And then we have SMCI, which is down 0.79% in pre-market trades. The 9-day exponential sitting at 48.50 is going to be a support for us today. And our resistance is going to be at around 50.29. And I think that SMCI is making the right moves by getting into Europe, by putting more investment in the Europe on the data center investments, because if the trade wars continue and if US continues to be reckless with the European Union, then they may want all their AI data to stay within Europe. And that's where I think super microcomputer is playing at. And I think that's the right move. Sooner rather than later, SMCI should be rewarded for that. But right now, pre-market, it's being punished by a drop of 0.79%. Broadcom is down 0.57% in pre-market trades. 9-day exponential at 271.82 is the support for today, followed by the 21-day exponential at 263.41. Palantir is down 1.09% in pre-market trades. We still have support from the 9-day exponential at 138.97, followed by 21-day at 136.45. Those are the two supports for today, and we are still on this bull channel, which is this diagonal line of support, which is going to provide support today at around 134.89. I don't expect Palantir to fall so hard, but definitely it's on the way down at this point of time. SMH is down 0.62% in pre-market trades, and the diagonal line of support is going to be at 282.66 for today, followed by the 9-day exponential at to 81.13. Those are the two supports. We still have the bearish divergence, which has to be accounted for. So I think a little bit of consolidation or movement downwards is justified. Next, let us look at Tempus AI, which went up 2.04% yesterday despite a tepid start. And this morning, again, it's down 0.40%. And we have a horizontal line of resistance at 59.39, which is about to be breached in the pre-market session. But I'll retain it as a resistance today. And I would say that our support, the 100-day exponential at 58.09 is going to be the first line of support, followed by the second line of support, which is going to be the 200-day exponential at 53.93. So that's the range for today. So with that said, my friends, I think that it's time for us to go and have a look at the genomics side. In genomics, we have Prime, which is down 1.71% in pre-market trades, after having jumped significantly over the last 4 or 5 trading days. It's been a steep valley upwards. Those of you who hold Prime, I think you have hit the jackpot. Now maybe the time, probably, in my personal opinion, to consider a covered call or maybe taking partial profits. The support for today is going to be at 4.54, and pre-market we are at 4.61. Next, let us look at Intelia, which is down 0.41% in pre-market trades, pushed down by the 200-day exponential at 12.30, which is going to be resistance for today, and the support for today is 11.31. Caribou Biosciences has no trade pre-market, but the support is going to be the 200-day exponential at 1.58. Beam Therapeutics is down 1.63%. Resistance is going to be the 100-day exponential at $22, and the support is very strong. It's going to be the confluence of the 9-day and the 21-day exponential, which is jointly sitting at 19.82. Next, we have Altimmune, which is down 2.05%. I've been reading up on Altimmune, and it is not looking that great at this point of time. I have some shares of Altimmune. I already made profits on it, but it seems like the remaining shares are going to wipe out the profits that I took. So I have to make a decision on that. I'm still paralyzed at this point of time with my analysis. I promised to do a video on Altimmune very soon. I think right now the charts are looking very weak. Momentum is bearish. MACD is also bearish. Overall sentiment is also bearish. And I think today the support is going to be somewhere around $4 because that's where we had stopped, somewhere in the range of $4 to around 3.85. That's the most it can drop today, in my opinion. Right now it's at 4.31. Next, let's go on to Verve. Verve is down 0.09%. It's got support from the 9-day exponential at 11.01. Right now it's at 11.05. I think 11.01 will hold it for today. Next, we have Editas, which is down 0.65% in pre-market trades. And the 9-day exponential, which is sitting somewhere around 2.68, is going to be the support for Editas today. I'm not saying that it's going to fall that much, but it's on the downward trend in the pre-morning trade, and that's how I think it's going to open. Illumina is down 1.05% in pre-market trade. The 9-day exponential at 97.62 is going to be the first line of support. Resistance is very strong at 102.67, which is the 200-day exponential, and also is very close to the horizontal line of resistance. CRISPR Therapeutics is down 2.12% in pre-market trades, and it has come down below this diagonal line of support, which now becomes a diagonal line of resistance, offering resistance at around 59.33. Pre-market, we are at 57.75. So again, personal opinion, maybe selling covered calls on CRISPR or taking partial profits would be a good idea to avoid being on the roller coaster. Allogene is up 2.38% in pre-market trades. And we have the 50-day exponential at 1.30 performing the role of immediate resistance. Pre-market, we are at 1.29, up 2.38%. So I'm thinking that if we break through the 50-day exponential, we will have a resistance at 1.36, which is the horizontal resistance line. Next, let us look at grain. Grail is down 1.47% in pre-market trades, and it has got support from the 50-day exponential at 41.06, and it has a very strong resistance in 44.38 and 44.85 range, which is where we have the 9-day and the 22-day exponential moving average sitting there. Now let us look at PACB. PACB is down PACB is down 0.67% in pre-market trade, and it's got support at around 1.45, and I think that's a very strong support for today because it's along with the 9-day exponential. So let's hope that we stay above that today. RT is down 1.24% in pre-market trades, and the 9-day exponential at 25.15 is going to be the first line of support. Vertex is down 0.93% in pre-market trades. Yesterday, as I mentioned, even though we were negative in the beginning, we did go up, and we had a long week on the upside and we came down. So today also we are down 0.93% in pre-market trades. Sentiment is bullish, MACD is bullish, and momentum is above average, and RSI is not yet overbought. So I'm thinking that Vertex could probably move sidewards, or it won't end up such heavy negative when it closes at the end of the day. But I think we may have slightly green to slightly red closing for Vertex. That's my opinion. Ginkgo Bioworks is down 1.85% in pre-market trades, and 9-day exponential at 10.98 is going to be the resistance, and the support is going to be the 21-day exponential at 10.13. And then I think I would like to look at Precision, which has got no trades pre-market. It was up 0.53% in trading action yesterday. It ended at 1.91. So I'm expecting Precision to move up again today a little bit more, and probably money taken out of other areas could potentially flow into Precision because there is this BLA coming up for approval. So that said, I think, my friends, I would like to bring this session to an end. And I also like to look at the chat section to see who is there. Hi, Inf. Thanks for being on the chat and giving me company. Yeah, Jensen is going with the fancy jacket to the White House. So we'll see what happens out there. And Tom from FX Evolution mentioned CRISPR in last night's videos. I have to go and check that out. I have to see what he has mentioned about and covered and brought it up and showed it. Okay, I'll check it out and see what he is thinking about. Thanks a lot for that heads up, Inf. I'll go and check out what Tom is saying. We need all the information we can get as retail investors in order to make any sense of the market. And I would like to hear from you guys if you have anything that you want to give me as heads up. And otherwise, I'm ready to wind up this session for today and catch up with you guys again in the next video. So thanks, Inf, and bye for now.